Welcome to the Deep Dive. Today we're looking at an absolutely electrifying session on Dalal Street, Monday, August 4th, 2025.
Yeah, definitely not just another trading day. Felt like there's a lot going on under the surface.
Exactly. Strategic moves, some surprising twists. So our mission today is to really distill the crucial insights for you. We'll hit the overall market, key sectors, and then zoom right into 15 specific stocks that were making waves.
And we're drawing on quite a stack of analysis here. Reports like Dalal Street, Auto and Defense Roar, India's market drama, the DII recovery reports, plus, insights from key market commentators.
Right. So let's set the scene for this roller coaster. The Nifty 50, our main benchmark.
Yeah.
Well, it showed some pretty good resilience. It notched up 0.64%, closed at 24,722.75.
Yeah.
And the range for the day was between, 24,736 high and a low of 24,554. So pretty steady climb, you could say.
Yeah, measured strength is a good way to put it. And while Nifty did that, the Bank Nifty, it also had its own little performance.
Right. How did that end up?
Closed at 55,641.55. It was a bit of a tightrope walk between 55,743 and 55,451.
Okay.
So the big question everyone's asking is, is this rally for real or just a bit of a bounce before the next leg down, maybe?
That's always the million-dollar question, isn't it?
Yeah.
What I felt watching it was this slow sort of buildup of confidence during the day, but definitely a tale of two indices in some ways. And speaking of dynamics, the real story, I think, was that classic tug-of-war, FIIs versus DIIs.
Oh, yes. The foreign investors.
They were selling. Net sellers to the tune of roughly 2,500 crore rupees.
Yeah.
About $300 million US.
Yeah, give or take, depending on the source. And this is the kicker, the DIIs, the domestic institutions.
The White Knights.
Absolutely played the white knight role. They just stepped right in, scooped up shares. Figures vary a bit. Some say 3,200 crore. Others mention up to 9,000 crore.
Wow, that's a huge range, but the takeaway is massive buying.
Massive. And it was absolutely crucial. It didn't just keep the market afloat, it actively pushed it higher. This really points to that shift we've been seeing.
Towards a more self-reliant market.
Exactly, a resilient ecosystem. The DIIs are increasingly becoming that bedrock, able to absorb these kinds of FII outflows. It's a fundamental shift.
And you saw that resilience maybe in the market breadth. It was modest, wasn't it? Advanced decline ratio about 1.2 to 1.
Right, so not everything was going up together. It tells you the buying was quite selective.
Very selective. It wasn't just throwing money at the wall.
No, definitely not. And that paints a really interesting picture when you look at the sectors. Some were feasting, others, well, not so much.
Huh. Like a family dinner where half the table's loving the food and the other half's pushing peas around. The auto and defense sectors were definitely feasting.
Oh yeah, they roared ahead. Stars of the show. Auto up 1.8%, defense surged 2.1%.
What's behind that? Especially those two.
Well, for auto, it seems to be a mix of things. You've got anticipation building for the festive season demand, plus some strong performance from new models hitting the road.
Okay.
And defense. That's heavily linked to the whole Make in India push, right? Big government contracts, focus on domestic production. That's creating a really strong order pipeline.
Makes sense. And what about the others? IT, pharma?
They were playing it safer. IT seemed like it was still recovering a bit from that sell-off on August 1st.
Right.
Small caps actually dipped slightly, down about 0.3%. FMCG held steady, which is typical. And metals actually had a pretty good day, too, up around 2.5%.
Okay, so a real mixed bag. Now, how does this fit with what's happening globally? Because the background noise wasn't exactly calm, was it?
No, not at all. Global cues were decidedly mixed. U.S. markets had dipped the day before, Dow around 39,500. S&P futures did tick up a bit.
On the weak jobs data, fueling rate cut hopes.
Exactly. But then there was that whole revision of past job data, which honestly spooked people more, hinting the slowdown might be deeper.
Right, that fraudulent revision, as some called it.
Yeah, and Europe's stock 600 was down too.
Yeah.
Asia, like the Nikkei and Hang Seng, seemed to be stabilizing a bit, though.
So despite all that,
Yeah.
you're saying Indian investors, especially DIIs, just kind of said, hold my chai, and kept buying?
Pretty much. They were stacking up on quality names. It feels a bit like that classic pre-earnings optimism, betting on strong results coming through. Plus, you can't ignore the background factors, like the potential easing of U.S. tariffs on India, down from 25% to maybe 10-15%. That would be huge for exports.
True. And then there's the immediate event risk, the RBI's MPC meeting.
Yes, that's happening right now, August 4th to 6th. The rate decision is due on the 6th.
And the expectation is?
Mostly leaning towards a small cut, maybe 0.25%. Honestly, given the slightly negative global backdrop trade talks, FII outflows, mixed Q1 results, a rate cut could be the main trigger needed for a really strong bounce.
Okay, that sets the stage perfectly. Let's pivot now and dive into some of the individual stocks, the character stories playing out within this broader market drama.
Sounds good. Where should we start? Auto was hot.
Let's start there. First up, Hyundai Motor India. Kind of this shiny new kid on the block, right? Known for SUVs, big EV plans.
Yep. How'd it do?
It opened at 2,148, touched a high of almost 2,200, 2,199.40 to be precise, and closed at 2,189.20. So a modest gain, 0.38%.
Okay.
Volumes were decent, 3.35 lakh shares. And look at this 45.88% delivery. People are holding on to it.
That's a good sign. Higher delivery suggests less speculative froth.
Yeah, and it's likely driven by their strong Q1 profits, 1,614 crore, and the buzz around new EV launches. Though remember, it did dip back in February in weaker Q3 numbers.
Right, so there's some history there. Technically, that modest gain is interesting. It actually formed a bullish engulfing candle.
Oh, okay, so buying pressure took over.
Exactly. It often signals a potential upward reversal, and it's sitting right on its 20-day EMA around 2,150, which is a common support level.
Volatility.
Moderate. ATR is 50, so expect daily moves around 50 rupees, give or take. And FIIs have been buying a bit up their stake, 0.5% last quarter.
Interesting. Okay, next in auto, Bosch Limited, the parts giant.
Ah, the luxury sedan of auto parts, pricey but reliable.
Huh, good one. It closed at 41,115 rupees, up 1.79%, and that's after a 6-day winning streak.
Wow, quite a run. Volumes.
66,000 shares traded, about 39% delivery. But the big story here is their Q1 2026 results. They look absolutely massive. Yearly income guidance up significantly from 4,400 crore to 5,000 crore. Net profit more than doubled from 465 crore to 11,115 crore.
Doubled. Seriously.
Yeah, EPS shot up from 158 to 378 rupees. That, plus the festive demand boost, is clearly what's fueling this.
Incredible numbers. But that PE ratio must be pretty high now.
It is, around 59.
Oof. That's paying a premium. Technically, it formed a doji candle today.
Indecision after that run.
Exactly. Suggests traders are pausing, thinking where next. But it has solid support at the 50-day average, around 39,500. Resistance looks like 42,000.
Anything else technical?
Bollinger Bands are tightening, which often precedes a breakout, could go either way. And insider buying picked up last month, which is usually a good sign.
Got it. Okay, let's quickly touch on Maruti Suzuki. King of passenger cars, nifty heavyweight.
The trusty sedan, reliable, maybe not flashy right now.
Closed at 12,365, up just 0.5%. 0.51%. Volumes, 2.56 lakh shares. Decent delivery at 49%. But interestingly, it's only up about 7.7% since April. Kind of lagging.
Yeah, it hasn't had the same explosive move as some others. Drivers are the usual suspects. Festive demand hopes, their new SUV push. But the EV competition is a big shadow looming.
And technically.
Another doji candle, like Bosch. And it's right near its 50-day average at 12,200. So, again, indecision. Support 12,000, resistance 12,500. Trend strength, weak, according to the ADX reading of 22.
Okay, let's shift to defense. That sector was strong. Bharat Electronics, BEL, you called it on fire earlier.
Absolutely, like a battleship in a stormy sea, steady and strong. Or maybe a stealth missile, close at 389.55, up a solid 3.27%.
Volumes were huge, too, 134.54 lakh shares. Delivery 43%. And this stock, get this, is up 33.4% just since April 1st.
Wow, that's momentum. And it's driven by solid fundamentals defense contracts, the Make in India boost, plus it's a zero-debt company. Very appealing.
Technical picture.
Looks bullish. Formed a bullish Harami pattern, often a continuation signal in an uptrend. The 20-day EMA around 380 is holding strong as support. ADX is 30, confirming the trend has legs. Options data points towards 400.
Institutions buying.
Oh, yes. DIIs have been consistently adding, up 1.2% this quarter.
All right. Next, Solar Industries India, the mid-cap defense star.
The Diwali firecracker, potentially explosive, maybe a bit risky. Closed at 14,366, up over 4%, 4.05%.
Volumes 1.49 lakh shares, strong delivery at 54%.
Its fuel is demand for explosives, both defense and mining use them. Technically, it formed a bullish Marubozu.
Meaning strong buying all day.
Pretty much, yeah. Strong conviction. Supports around 13,500, resistance near 15,000. The 50-day average at 13,800 offers cushion, but watch out, the ATR is 400.
High volatility then. Big daily swing.
Definitely expect big moves. On the plus side, promoter holdings rose 0.8% last quarter.
Okay, let's move beyond auto and defense. Some other interesting movers today. Paradeep Phosphates, a stunner.
Yeah, what happened there? Like a monsoon harvest, lush but unpredictable.
Closed at 228.63, up almost 5%, 4.97%, but the volume, absolutely colossal, 239.44 lakh shares traded.
Whoa, that's massive volume.
Here's the catch. Only 16.92% delivery.
Ouch, high volume, low delivery. That often screams speculation, doesn't it?
Yeah, it feels like a lot of intraday churning. But the stock itself is up an incredible 106% since April.
Driven by rural demand, fertilizer subsidies, that whole story. But technically, today it formed a shooting star candle.
Uh-oh. Reversal signal after that run-up.
It can be, yeah. Hints at resistance. Supports at 210, resistance 240, and the ADX is only 20, suggesting the trend might be losing steam. Caution advised.
Okay. How about ThyroCare Technologies? Diagnostics play? Healthy pick or getting pricey?
Like a pricey gym membership? Great if you actually use it. Closed at 1,352.90, up 2.43%. Volumes were lower, 80,000 shares, 40% delivery.
But this one's also had a huge run, up 87% since April.
Yeah, the post-pandemic diagnostics demand is still a factor, but the PE is around 39, getting steep.
Tactical.
Bullish engulfing pattern today, and it's above the 50-day average at 1,300, so that's positive. Resistance near 1,400. ATR is 40, so moderate volatility. FIIs added a bit last quarter, 0.3%.
Let's talk about an underdog, maybe. Z-Learn Limited.
The risky pop quiz, potentially high reward, but definitely high risk. This one actually closed down 1.22% at 10.56 rupees.
Volumes, 7.9 lakh shares, but check this zero delivery. All intraday.
Zero delivery? Yeah. On decent volume, that's a major red flag.
Especially since it's actually up 93% since April overall. But today's move and that zero delivery, concerning.
Absolutely. Extreme caution needed. Education is a tough sector anyway, regulatory risks, and 100% intraday volume often points to speculative or operator activity. Technically, a bearish candle and a weak ADX of 15 confirm there's no real trend here.
Institutional interest.
None to speak of. I'd personally skip this one. Too much uncertainty.
Fair enough. Okay, quick hits out a few more. Shankara Building Products.
Like a half-built house promising, maybe a bit shaky foundation. Closed at 11,196.7, up 3.43%. Volumes 1.75 lakh, 35% delivery.
Another big gainer since April, up 105%.
Reflects that strong construction demand. Technically bullish candle above the 20-day EMA at 11,250, suggesting momentum. Resistance 12,250. ATR 50, so expect swings. Promoter stake increased too.
JK Cement.
The concrete wall, solid but heavy, closed 6,784, up 1.5%. Good volume, 91,000 shares, solid delivery over 53%.
Up 37.5% since April. Infrastructure demand story.
Yep. Bullish engulfing today, support in the 50-day SMA, 6,600, resistance 7,000, moderate volatility, ATR 150. FIIs added 17.7 lakh, 42% delivery.
Up 26% since April, steel demand, export recovery.
Exactly. Bullish Maruti today, strong support at the 20-day EMA, 710, resistance 750. ADX at 30 says the trend is strong, DIIs up their stake, 0.6%, looks positive.
Marico Limited, FMCG midcap.
The well-oiled machine. Closed 723.3, up 1.7%. High volume, 44.5 lakh shares, delivery about 38%.
Up 11.7% since April. Does that follow parachute? Rural demand picking up.
Seems like it. Technically, bullish candle above the 20-day EMA, 710, resistance 740, decent trend strength, ADX 28. Promoter holdings also up slightly, looks constructive.
And Vishal Megabart. Retail play.
The crowded bazaar, busy, maybe a bit chaotic. Close 141.68, up just 0.43%. Very high volume, 128 lakh shares, good delivery over 53%.
Up 36.6% since April. Consumption story.
Right. Technically a neutral candle today, right at the 50-day average, 140, suggests consolidation. Resistance at 145 seems to be pausing for breath.
Okay, and we should probably mention Sri Adhikari Brothers television network.
The reality show stock, flashy, but maybe fleeting. Closed at 1,085.20, up the full 5% circuit.
But volumes were tiny, 18,000 shares, and again, zero delivery. All intraday.
Yeah, despite an 81% gain since April, this is highly speculative. Bullish candle looks tempting, but no delivery and a very weak ADX 12. It's just noise, not for regular investors.
Right. And just a quick word of caution on some others. We noticed Wee Coast Hotels, Gayatri Highways, Generic Engineering, Megasoft.
Yeah, names that pop up with big percentage gains, but often on tiny volume, zero delivery. These are highly speculative, illiquid, often penny stocks. Definitely not for the faint-hearted or, your retirement fund.
Agreed. Check delivery percentages and liquidity, always. So, wrapping up the outlook. What's the overall feeling Indian market marching to its own beat.
It feels that way, doesn't it? Domestic confidence, strong DII buying. They really are the heroes of this particular narrative right now.
So what about tomorrow, Tuesday, August 5th? Any specific levels?
Well, for Nifty, the next hurdle seems to be around 24,850. Support looks pretty solid, back at 24,600.
And Bank Nifty?
Looks like it wants to test 56,000, but if you're trading short-term, keep an alert around 55,300. A break below that could signal a pullback. Generally, maybe a buy-on-dips approach for quality stocks seems sensible.
Okay. Stocks they'll be watching closely.
Definitely keeping an eye on Hyundai, BEL, and Jindal Stainless. They have momentum and strong stories.
Yeah, I agree with those.
Also, solar industries and paradeep phosphates could provide sparks, but remember the volatility and, for paradeep, that low delivery today. Marico could be interesting if that rural demand theme gathers pace, and Bosch and JK Cement look like they want to push higher.
Right. Now, for that critical thinking piece, while everything feels quite bullish, driven by DIIs.
Yeah, there's that nagging analyst view, isn't there? Suggesting the market is maybe due a proper correction based on fundamentals, that earnings growth isn't quite matching the valuation expansion.
Exactly. So the big question for you, the listener, is this rally purely reflecting economic health, or is it more about that strong DII support, maybe masking some underlying weaknesses or just speculative froth in places?
And the RBI decision this week is huge. That will be a major trigger, likely giving us a clearer direction.
So the market, like a monsoon cloud perhaps, promising but definitely unpredictable. Is India truly decoupling from global woes, or is this just temporary bravado before the real drama?
What will tomorrow bring? Will the bulls keep running, or will those global headwinds finally bite? Keep your risk managed, stay curious.
And keep tuning in as the Wall Street drama continues.